Hello and welcome to Pitt Street Research. My name is Stuart Roberts and I'm one of the co-founders of our firm. And joining me on the afternoon of Wednesday, the 18th of September, 2024, from Johannesburg is Mr. John de Vries, who's the CEO of BlackRock Mining ASX BKT. John, good morning to you.
Yeah, good morning or good afternoon, Stu. I think on average we'll have to settle for good day.
So you're in Johannesburg at the moment, where you have just negotiated a pretty attractive debt funding package from a couple of institutions in South Africa to get the Mahenge graphite project in Tanzania up and running. Talk to us about how that process has unfolded and how good a deal you've got.
Well, I think, Stu, this gets back to the overall approach that we've done for the business. We've always said that we needed a good quantum of debt in there, not only to help lever up returns for our equity holders, but as we go into the main construction round, we want equity holders to be able to look at the debt position there and gain a lot of confidence that the debt's been gone over by independent technical experts. And in terms of the sort of investment risk that they'd be looking at, it's very, very different to we're just doing a normal raise on the ASX. We've got POSCO sitting there, we've got the bank sitting there, and that talks an extensive de-risking process that we've taken a project through.
Right. Talk to us specifically about the lead partners in the debt funding round that you've got, including Industrial Corp, Development Corp of South Africa.
Yeah. Again, this gets back to how you go about funding a project. Both IDC and DBSA, which is the South African parastatals, they are really development finance institutions, and what they're looking for is not only a good project, but a good project that makes a difference to the host nation. So not only at Mahenge do we do the better than $200 million investment in the ground, but we're also part of that investment is the high voltage transmission line from Ifakara to Mahenge. That does a couple of things. It gives us 8 cents a kilowatt hour power, so it puts us at the bottom of the cost curve because it is competitively priced.
I'm breaking the tension now because that kind of pricing is not what you get in our country, I must say.
I got to tell you, it's a very good deal for us. It's also a good deal for Tanzania because we build the power line, and that power line provides an industrial base to Mahenge. So it projects us to where we want to be at the bottom of the cost curve, but puts us there sustainably, and it's hydro powered, so it ticks a lot of boxes. So when we're engaging with IDC and DBSA, not only are we a project worthy of being funded, but we also have this nation building agenda behind us. And that really makes a difference in how you engage with the DFIs.
Right. For those people who came into the graphite story lately, people are probably wondering why graphite projects are even fundable right now, given the price of graphite fines is so low. And as I've been telling people, BlackRock is not fines. Your flake size is pretty big, and the basket pricing for your notional product mix has actually been recovering in 2024.
Yeah, that's kind of, it takes a little bit to explain that. But if you think about graphite comprised of fines and large flake, and what we find is the majority of production is in that fines bracket because people need to mill down the large flake to get it to the right concentrate grade. Geologically, Mahenge lets us produce 70% large flake off a fairly simple flotation circuit. So what we're seeing is people have piled into the synthetic graphite space, and effectively the anode space is oversupplied at the moment. That's really pushed fines graphite to the bottom of the floorboards. What that means is that mines start slowing down production, which actually causes large flake prices to go up. So where we are in a scenario where we've got more large flake than fines, our basket price is actually increasing over the last 12 months. So we're actually in a good position. Again, while it's graphite, I think you need to think more than just EV. This is more of an industrial minerals project.
Right. So we've got POSCO on both the offtake as a shareholder in BlackRock and committed to taking $40 million more equity. We've got DBSA and IDC funding the debt side. Now comes the really fun part. You flagged that you're going through a partnering process for Mahengi. And I imagine that the phone's been ringing a bit hotter than usual since you announced your debt funding.
I wouldn't say they're ringing hotter than usual. I'd say they're actually picking up and taking the call now, which is a good start. But I think, again, this gets back to you've got a very strong rhetoric around where the ultimate volume of the commodity is going to go. So we need to add a lot more additional capacity in a hurry. And its question is really who's got the right entry strategy into this space. Our approach of using POSCO as a supply chain partner. So POSCO take all the fines, and quite frankly, that's the hard part of the market. So POSCO are doing the heavy lifting for us there. And then, we've got DBSA and IDC there and CRDB out of Tanzania as part of the syndicate. When we're now talking to potential new cornerstones to come in, it's a very different rhetoric. The entry strategy isn't trying to be everything to everyone. We're being very specific about our skill set. We're upstream. We're miners. We know what we can do. And the conversation we have with POSCO is, POSCO can out-manufacture us, but we can out-mine POSCO. But together, it's a little bit like a football team. You need forwards, backs, and midfields, and everybody needs to play to position and be able to pass the ball. And that's really what we are trying to do with this build-up of this supply chain.
Right. So looking forward, obviously, Mahengi's been shovel ready for quite a while. What needs to happen, say, between now and Christmas 2024? And we're having this conversation in latter half of September.
Yeah, I'm sensitive about timing on this, but clearly we have to run down the partner process, which is why I'm in Joburg and not Dar es Salaam or Perth. So we'll complete that hopefully over the next couple of weeks. We then, obviously need to complete the equity round, and I really can't say how much that's going to be till I know what the partner process completes. And then we want boots on the ground as quickly as possible. There's a couple of little regulatory things we need to sort out in Tanzania on the way through, registering various documents. But I don't think they're going to be a roadblock. We'll be able to get through that fairly quickly. I'm hoping Christmas, I'm standing on top of the hill with the smell of wet concrete in the morning.
We've known for a while now that Tanzania is well and truly open for business under the presidency of Samia Suluhu Hassan. You've bankable feasibility study. We're talking a couple of $1 billion potentially worth of stakeholder value in this project, or more, depending on where the pricing is. What's been your experience in terms of going back and looking at the bankable feasibility study of what would need to change now that you're getting up to the capital spending stage?
Actually, surprisingly, we really haven't seen much change in terms of scope creep. So the scope is still the scope. I think if we're to go back and look at that, one area we did underestimate was the amount of effort we needed to put into the ESG, particularly the environmental studies. But ultimately, I think, we're looking at how the rigor that gets applied to these things is increasing year on year as well. So, that's an area that, is going to require work and will require ongoing work for a while. But, I think the DFS actually didn't do too bad in the scheme of things. We've not seen major engineering scope changes. We've not seen scope creep. And this has got through an ITE process where independent technical experts are looking after the bank's best interests, have gone through it and looked at it and come away pretty happy with it. I think one of the key things for me is actually the dry stack. We went down that line there to minimise the issues we'd have with wet tailings dam. But as we've gone into this in a bit more detail, it's just turning out to be a gift that keeps giving because it is a small footprint in terms of ground. We've got a high reuse rate of water, so we're not competing for large volumes of water. And critically, we don't have a dam that can turn into a real problem if you end up for gnarly wet season. So I think we've got ourselves it's a couple of good engineering decisions there.
Well, John de Vries, obviously you're just one man in a pretty talented team. So well done to yourself, but more importantly to the BlackRock team to have taken over the last 7 years what was conceptually a great project into one that's just about to have the first concrete get poured. Well done.
Yeah, well, thanks for that, Stu. And look, I think the thing that does stand out for BKT is the depth of the team. I'm only one person, but we've got a fantastic exco within the company, and everybody really does step up and do an amazing job. And also our board, we sat down there a couple of weeks ago and recognised that around the board we've got something like about 120 years of industry experience across the directors. You don't often get that level of domain knowledge and experience in sort of at the junior end of the ASX. So I think the team's fantastic, and it's been an absolute honour to work with them to deliver what we've delivered.
Well, John de Vries, thank you for joining Pitt Street Research.
Thank you.